Hi, my name's Alec. I'm a currency broker and markets professional, and in today's video I'm going to be walking you through Canadian dollars into British pound sterling international transfers. I'm going to address some of the tips and tricks that I picked up on in my time helping many clients move funds between these two currencies, as well as let you know some common pitfalls that you'll certainly be wanting to avoid. So stick around and we'll go through the details. So something really important to consider when doing a Canadian dollar into British pound sterling transfer is the timing at which you actually push the button and execute the exchange. It goes without saying, currency markets are notoriously unpredictable, but in my opinion, if you absorb some of the knowledge that's out there, understand what's driving the markets, you have, in my opinion, a better chance of pushing the button at the most optimal time. And some of the things you want to consider particularly relevant to this currency pair is economic indicators. So these are things like inflation data, growth data, something called PMIs, which are a good index of how well the underlying economy is performing. These daily releases are coming out constantly, releasing lots of information about how the relative economies are performing, and if one seems to be doing better, you can expect the currency pair to move on the back of that. So just understanding if there's a big announcement coming out around your currency transfer, you may or may not want to avoid that. So just bearing that in mind can be extremely helpful. Something to be acutely aware of is the dynamic of central banks fighting inflation. It's something we're all aware of. Everything seems to be costing more, and how the central banks are supposed to respond to that is by increasing their interest rates to try and bring that inflation down. And that has been the case both with the Bank of Canada and the Bank of England, and what you've really seen is sort of a leapfrogging effect whereby one central bank will increase their interest rates, and then generally speaking, whenever that other central bank has their meeting in the calendar, they'll do the same. So you'll see the currency pair sort of moving in quite sort of volatile fashion, to the point where now sort of interest rates on both sides of the Atlantic are around sort of 4 to 5%. So rates have increased pretty quickly up to those sort of levels, and now we're starting to see them sort of tail off a little bit as central banks sort of step back and see how their policies have impacted the economy. So it's just something to be aware of, that as we've seen in the UK, for example, some inflation data came in hotter than expected. The market immediately repriced their sort of expectations of further rate hikes from the Bank of England. We saw the pound get stronger, and for somebody going from Canadian dollars into British pounds, because you're buying in effect a stronger currency, your Canadian dollars don't go quite as far, so you'd be getting less currency out the other side. So these impacts can change the amount that you're going to receive quite substantially, particularly if you're looking at a large transfer, something that's sort of property or investment related or what have you. So just understanding that dynamic is incredibly important. One thing to consider briefly is geopolitical events, one of which is Brexit. Although it's been a few years since we actually voted to leave the European Union, there are still some ripple effects when it comes to treaties and trade terms and negotiation of those. So just bear that in mind. Sometimes Brexit sort of bubbles up to the surface again and starts to sort of dominate the news flow. So if you are looking at pushing the button around those sort of events, just be cognizant that it's going to be moving the markets for or against you. Something else that you should really be paying close attention to when doing a Canadian dollar into pound sterling transfer is the role that commodities play. Canada is a major exporter of a vast array of commodities. You're talking oil, gas, precious metals, minerals, lumber. The list really does go on. It's one of the world's top exporting nations when it comes to commodities. So the demand and supply of those commodities does have a real impact on Canadian export revenues and terms of trade. So just bear that in mind. If, for example, somewhere like China or the US looks like their economy is slowing, for example, you could see some lower than expected GDP data. The market then may price in the expectation that there'll be lower demand for those key commodity groups as consumption and investment falls. Therefore, the Canadian dollar may start to weaken as commodity prices fall. So just bear that in mind, that if you are looking at a substantial trade moving from CAD into GBP, your position could deteriorate if, for example, global demand for commodities begins to fall. So if you are looking at processing a CAD to GBP payment and you're wondering how you actually go about doing that, I wanted to break down the three main ways that you can go about processing that transfer. And the first one is to use your bank. Banks are safe and secure, pretty convenient as well. All it takes is logging on or or going into branch, using the account you've already got. You don't have to go into the process of sort of setting up an account with a currency specialist. You can just give them the details of the sterling account you want to pay, and what they'll do is they'll carry out the conversion behind the scenes for you and instruct that international payment. And all being well, those funds should be in the account within sort of 2 to 4 working days. That all sounds great, but the main downside, of course, is the costs involved. Banks have built up a reputation for charging excessive fees, not just sort of a per payment fixed charge, but also giving very poor rates of exchange. And what I mean by that is, what the bank will do is they'll build in a percentage fee within the rate of exchange they give you. So if they're buying at the market, which is here, which is where all sort of currency companies and banks do so, they're going to be giving you sort of a trading rate, as they'll probably call it, right down here. And that difference between the two is what is their sort of percentage fee, sometimes called a spread or a margin. And that fee is normally pretty large. Depending on your bank, it could be anywhere from sort of 1.5%, even up to 4 or 5%, which on a large transfer is an enormous fee that's hidden from you that you'd be paying. So I would suggest in most circumstances you want to be avoiding your bank because it is pretty expensive. And so therefore you'll be looking for an alternative to the bank. And the first one is via what's known as an online platform or online application. And as the name suggests, what you do is you'll find one of these companies, log on, set up an account, register and do a quick anti-money laundering check, and then you'll be live and ready to go, at which point you'll be given the details of a Canadian dollar bank account which you can transfer your funds into, and once they arrive you can process an exchange, add the details of the sterling account you want to pay, and the payment is dispatched. Nice and straightforward, very quick and convenient. And what's also fantastic is a lot of these companies are super transparent on their fees. So as mentioned, that bank hides a percentage fee within the rate. That's how currency companies make money as well. But what they do is they tell you what that percentage fee is. And generally, it's well less than 1%. So it's very cheap and efficient to move funds. I'd say the only downside with an online platform is sometimes, as the name suggests, it's all online, and sometimes behind the scenes, the customer service can be lacking, which is fine if you're doing a small payment. It's not a massive deal to have to wait a few hours to get a response. But if you're looking at a large transfer, maybe it's your sort of entire life savings, you're relocating, it's a large property transfer, sometimes you just want to be able to pick up the phone and speak to someone who knows exactly what they're doing, maybe can talk you through the markets, let you know what's going on, give you some updates, and that can be very reassuring when moving a large amount. So just weigh up the pros and cons. You're getting the transparency and low fees, but sometimes the service, not in all cases, but sometimes the service can be a little bit lacking. So that's where sort of the second bank alternative, the currency broker as they're known, comes into its own. And what they're going to give you is that sort of one-to-one account manager style service, which is very useful for moving large amounts. You'll be able to pick up the phone, speak to your representative, get updates on both the market and the progress of your trade and payments. The main downside though is, much like the bank, they will bake their fees into a rate of exchange. So that percentage fee, more often than not, is hidden from you. So if you are going to use a currency company like that, I would suggest you try really hard to actually pin down the fees that they're going to be charging you. And if they're not forthcoming with that information, I'd probably give that a miss. Otherwise, you're not going to get the proper value that you want from a currency broker. So I just wanted to walk you through some of the common pitfalls when it comes to CAD to GBP transfers. And the first one is the bank not carrying out your instructions correctly. And what I mean by that is, when you go to move your funds to the currency company that you're working with, what will often happen is they won't have a Canadian dollar account based in Canada. It will be based in the country that they operate in. So they may have a CAD account in the UK, which is pretty common. And what the bank will have to do in Canada is process an international CAD transfer to that CAD account in the UK. What can sometimes happen is the bank in Canada won't understand your instructions correctly. They'll go and convert those funds into sterling, thinking they're paying an account in the UK. Well, they need converting, let's do it, and then we'll send the funds to the UK, but they shouldn't have done. And what that means is they've converted it once, and when it lands in the UK, it'll be converted back again into Canadian dollars by the receiving bank. So you'll have two incorrect conversions before the funds even hit the currency company's account. So make sure when you're instructing the bank in Canada, you are very specific about the conversion not taking place. You are sending CAD to a CAD account, and that should be okay. That's where the value of speaking to a currency company that knows what they're doing is really important. They'll be able to give you the specific instructions to make sure that process goes smoothly and there is no incorrect conversion of funds. The next pitfall to avoid is leaving things to the last minute. And whilst I appreciate currency transfers can be a bit of an afterthought, given that there can be a lot of sort of complicated stuff that precedes that, particularly if you're selling a house or liquidating investments, there's a lot to get through till you actually think about doing the trade. But bear in mind that if you do approach a few currency companies, understand how they may be able to help you, you could find out a few different options that may speed up the process, one of which is what we call in the industry third-party funds. And what we mean by that is, for example, you are selling a house, what you could do, rather than have those Canadian dollars sent to your personal Canadian dollar account to then be moved to a currency company, you could actually provide the details of your currency company's Canadian dollar safeguarded account to your lawyer who will be transferring the proceeds. That way you're skipping out your personal bank account, all the kind of process that takes place trying to get the money out of that. You might have daily transfer limits on that account. If you're not in the country, it can also be difficult. Those funds can be moved cleanly and quickly to your currency company, at which point they are ready to be converted whenever you give the green light. So by getting ahead of the game, doing your research in advance, you may be able to get a few of those things figured out so that you haven't got funds transferred into your account, they're stuck there, and they're very difficult to then get transferred to a currency company. So I just wanted to touch on the topic of security briefly. I'll include more information in the comprehensive blog I've written on the whole subject of moving Canadian dollars into pounds. But the main takeaway point is just make sure the company that you're using operates safeguarded client holding accounts. So seek out the fact that they're properly regulated. In the UK, it's under the FCA. Make sure that company is using FCA authorized accounts. And what that means for you is it affords you a level of security by which if that company were to cease trading, those funds are fully protected. So it's not capped under any scheme like it is with a traditional bank account of £85,000. If the worst were to happen, if that company goes bust, those funds are fully protected up to the full amount. The next thing I want to talk about when it comes to security is the practice of teaser rates. Now, I can't speak for all companies, and it's certainly not every company that does this, but as somebody who's worked in the industry, I can tell you this does happen for a fact. And as the name suggests, what generally happens is you as a prospective client will be shopping around, looking at different providers and asking for quotes. Companies will get back to you, offering an exchange rate that they would hypothetically offer you in that scenario while your fund's there and ready to trade with them. They won't, however, give you a percentage fee breakdown as to how far they are from the market to that trading rate they're quoting you. What you'll do is, because that rate is so close to market, you'll enthusiastically sign up thinking you're going to get a great deal from this company. However, when you go ahead and send the funds to them, which can be several weeks after you've signed up or had that original quote, you'll find that that percentage fee has been massively increased to the point that that exchange rate you're being offered is much further from the market than it was originally promised to you. You may notice, you may not. It just depends whether you're paying attention, to be quite honest with you. And a lot of people do get duped by this scam. So just be incredibly careful, not being lured in by any sort of teaser rates. Make sure you're nailing down a transparent percentage fee in writing before you send any money to anyone or register for an account. That way you're going to protect yourself from being the victim of this scam. It's a subject that I feel very passionate about raising awareness on, so much so I actually blew the whistle with the FCA, the UK regulator, about this sort of bait and switch teaser rate practice. I'm hoping they're going to do something about it, but for now, companies are still doing this, so just be tremendously careful and make sure you're getting that transparent quote. Okay, so the next thing I wanted to do is just break down the step-by-step process of how to go about transferring Canadian dollars into British pounds. And the first part is choose the company you want to work with. Hopefully the information in this video, as well as the more detailed blog in the description below, has given you all the info you need to make an informed decision. Having done that, you then need to go ahead and actually get yourself set up with the company you want to use. So register, provide them all the documentation to get ready. That may form a passport, proof of address. It could be a sale document or other source of funds proof, depending on the size of transfer. Get that stuff out the way as soon as possible so your account can be made ready well in advance of your actual transfer taking place. What will then happen is you'll be provided the details of a Canadian dollar account you'll need to transfer your funds to. You can then send your money over to that currency company. Depending on the company you're working with, some will ask for that money to be sent in advance, as I've just sort of outlined. Other companies, if it's a smaller amount, they may allow you to book a trade without the money being there. So just understand the trading requirements with the company, particularly if it's a large amount. They may ask for all or some of the money to be on the account before actually sort of locking in the trade and pushing the button. That all aside, once you've booked your trade or sent the money in, you have an exchange that's agreed, you'll then be ready to send some sterling out to the account you're choosing. Provide the recipient account information. It's going to be sort code, account number, name on the account, and then the other additional information that currency company requests, at which point they will dispatch funds on your behalf. They'll be sent to the account. That process normally takes up to 24 hours. If it's a smaller amount, they'll be sent via what's known as the faster payment system, which is pretty much instantaneous. Or if it's a larger amount, over £250,000, they'll be more than likely sent via the CHAP system, which is normally same day, unless you send it right at the end of the working day, at which point it will fall into sort of generally the following morning. If, for instance, the money doesn't arrive within 24 hours, I'd certainly be getting onto the phone and speaking to that currency company and asking them to get to the bottom of where the funds are. Okay, so that just about wraps up this video. I hope you found it useful. This has been your comprehensive guide of moving Canadian dollars into British pounds. If you've got any further questions, feel free to drop a comment below. But for now, if there's one thing you do take away from this video, I hope it would be getting a transparent percentage fee breakdown is so crucial to any successful currency transfer. And if you are looking for somebody to assist you with a currency exchange, my name's Alec. I'm the founder of a company called TADfi. We are a high volume specialising currency broker based in the UK. We offer all our clients a fully transparent percentage fee breakdown, so you know exactly what you'll be paying for the service. That service entails a one-to-one account ledger, telephone dealing line, all the good service you'd associate with a telephone brokerage or a currency broker, market monitoring, payment updates, all that kind of good stuff. We don't sacrifice on the transparency or the convenience of online platforms. We have our own intuitive online system where you can log on, book your own trades, see your balances, action payments, so you're not sacrificing with any of that convenience you'd get with some of our competitors. So we really do merge the best of both worlds when it comes to the currency options out there. If that sounds like something that would be of interest to you, feel free to reach out. There's an inquiry form in the description below. Follow through that link, pop in a few basic details, and we'll get back to you with a tailored quote as soon as we possibly can. But for now, thanks so much for your time. Hopefully see you in the next video.